that drive our economy and shape our world. Up ahead, Philippine Finance Secretary Ralph Recto says inflation likely slowed further this month. Philippine shares go deeper into bull territory. We'll discuss this and more with the founder and chairman of Calum Trading Institute, Edmund Lee. A former Singaporean transport minister pleads guilty to bribery in the city-state's first political graft trial for nearly half a century. And A-list stars, including Miss Universe 2015 Pia Wurtzbach, walk the runway to open Paris Fashion Week. First, let's take a look at how markets in Asia are doing. Right now, they're trading sideways with an upward bias in early trade after China unveiled stimulus measures to support its sluggish economy. Japan's Nikkei 225 is up by 0.2%. South Korea's Kospi is up by nearly 0.33%, while Australia's ASX 200 is flat. Meantime, futures for Hong Kong's Hang Seng Index point to a 4% rise at the open. Mainland China's CSI 300 is coming off its biggest one-day gain in over years. Now, over in Wall Street, the Dow Jones and S&P 500 hit record highs as mining stocks surged. The Dow added 0.2%, while the S&P 500 gained 0.3%. The tech-heavy Nasdaq rose 0.6%. Now, U.S.-listed shares of Chinese firms like Alibaba, PDD Holdings, and Li Auto also soared, rallying at least 8% each.
Earnings season is almost over. It's effectively over. So a lot of headlines tend to move markets in between the two earnings seasons. So there could be a lot, there could be none. There's not really much moving the markets in one direction or another today. Last week, when the Fed cut rates, there was a lot of movement and we continued to hit record highs. And so markets tend to become really shy once we hit record highs, because the question after that is, do we keep going up? And I don't think there's enough catalyst for the market to continue to go up, especially in light of some of the confidence numbers that came in lower today than expected. So it remains to be seen at high valuations and record highs if we can continue moving upward for the rest of the year, especially with the election ahead.
Over in Europe, the major indices tracked higher as luxury giants and automakers exposed to China led the charge. The UK's FTSE 100 inched up by 0.3%, while the German DAX gained 0.8%. France's CAC 40 went up by 1.3%. Now, over in the commodities market, spot gold prices went up by more than 8% to $2,659 an ounce. Oil prices also climbed to a 3-week high on news from China that the world's top crude importer. Now, U.S. crude and Brent crude increased by 1.7% each to settle at $71.56 and $75.17 per barrel, respectively. Finance Secretary Ralph Recto says inflation likely slowed further this month. Now, he says that the inflation print likely settled at 2.5% in September, lower than the 3.3% recorded in August. The finance chief points out that the tariff reduction on rice imports is helping to keep inflation at bay.
Well, normally, seasonal naman yan. Tuwing fourth quarter, tumataas ang konti. Pero like I said, we expect it to be within the target range of the BSP of anywhere between 2 to 4%. So for the full year, we're looking at the total inflation rate to be about 3.4%.
Recto adds that cooling inflation will give the Bangko Sentral ng Pilipinas more room to cut interest rates in step with the U.S. Federal Reserve.
Good afternoon. Let's start with you, Secretary.
Yeah, thanks.
Secretary Ralph?
Yes.
Go ahead.
Well, first and foremost, we had a briefing, as mentioned by Daphne earlier, by DEDA, with the President insofar as inflation is concerned. And the good news is that inflation is on a downward trend. Last year, inflation was about 6.1%. Today, we're roughly at 3.3%. We expect inflation to go down to 2.5% by September. At ang pinakamahalaga, palagay ko, meron tayong sapat na bigas at hamon sa Pasko.
That's good news.
The Bangko Sentral ng Pilipinas defends its decision to actively sell its gold holdings. This as data from online brokerage firm Best Brokers shows that the BSP sold the most gold among central banks in the world in the first half of the year. Best Brokers data also shows that the BSP unloaded nearly 25 tons of gold during the period, bringing its gold holdings down to just 134 tons, down nearly 16%. The BSP, however, did not disclose how much it raised from the sale or the volumes it unloaded. They just said that the sale is part of its active reserve management strategy. The central bank adds that it also capitalized on the high price of gold in the world market to generate more income. Even with the gold sale, the BSP says that the country's dollar reserves remain robust, with gross international reserves hitting $108 billion in August, higher than the $104 billion in December of 2023. Gold prices scaled a fresh all-time high this week, with the precious metal on track for its best annual gain in 14 years. The Philippine manufacturing sector shows signs of strength as sales accelerate. The details from Soojin Kim.
The manufacturing sector's value of net sales index, or VANSI, slightly increased in the month of July. From 101.2% in the same month last year, it rose to 105.6%, translating to a 4.3% year-on-year growth rate. According to the Philippine Statistics Authority, or PSA, the increase was driven by the transport equipment, beverage, and electrical equipment sectors. Meanwhile, the volume of net sales index, or VONSI, registered at 107.5% in July, higher than the 102.6% recorded last year. VANSI measures the change in the value of net sales of the manufacturing sector, while VONSI measures net sales output. The Board of Investments and the NEDA say these details are important to help policymakers from the government and the private sector to monitor the performance of the manufacturing sector.
The sector is not only a significant source of employment, but also a dynamic driver of economic growth. A total of 25,279 establishments in the formal sector of the economy were engaged in the manufacturing activities. The manufacturing sector employed a total of 1.2 million workers in 2021. We can still do much more.
Meanwhile, the producer price index is slightly down. From 98.7% in July 2023, it is down to 98.2% in the same month this year. Major contributors to this were coke and refined petroleum products, fabricated metal products, and non-metallic mineral products. Soojin Kim, BNC.
Singapore's former transport minister, Subraman Inan Iswaran pleads guilty to bribery in the city-state's first political graft trial in nearly half a century. Iswaran was initially facing 35 charges, including corruption. But in a surprise move, prosecutors reduced the charges to 5 and are reportedly requesting a much lighter sentence of 6 to 7 months in jail. Iswaran declined to comment after Tuesday's court session. He will be sentenced on October 3rd.
As you know, my lawyers have stated the position clearly, and as you're well aware, the matter is now sub judice. So it's not appropriate for me to say anything more, and I just want to thank all of you for coming, and let's see how it goes.
Iswaran, known for helping bring the famous Formula One Grand Prix to Singapore, is accused of taking kickbacks worth hundreds of thousands of dollars from businessmen. He was arrested in July last year and resigned from government in January. Iswaran's case has gripped Singapore, a nation that prides itself on a well-paid and efficient bureaucracy, as well as strong governance. Elsewhere in the world, German business morale falls for a fourth straight month, adding to signs that the Eurozone's biggest economy may have tipped into recession. The headline IFO Business Climate Index dropped from 86.6 in August to 85.4 in September. That's even lower than the market's expectations of 86. The president of the IFO Institute, Clemens Fust, notes increasing energy prices and a possible re-election of Donald Trump as U.S. president are contributing to uncertainty. Now, Fust explains a Trump victory in the November elections is feared to lead to protectionism. He says Germany would need to significantly reduce bureaucracy and improve infrastructure if it wants its economy to grow. On to the star-studded opening of the Paris Fashion Week. A-list celebrities and models braved the rain to grace the gigantic open-air catwalk show Monday. They include Jane Fonda, Eva Longoria, Viola Davis, Kendall Jenner, Heidi Klum, and Cara Delevingne. Also walking the runway, Miss Universe 2015, the Philippines' very own Pia Wurtzbach. The beauty queen also attended this year's Fashion Week events in Milan and in New York. The Paris Fashion Week will run until October 1st. We're taking a quick break. Please stay with us as we dive deep into the numbers and the narratives that matter most to your bottom line.
The trailblazers, the disruptors, the titans of the industry.
We should safeguard our tradition.
We've got 53 sites in the Philippines, and each of those sites have been goaled to adopt a community.
Know what drives them as we dig deeper into their stories.
We're also bringing and helping medical tourism.
The government has to support these local farmers.
Industry Beacon on BNC, the Billionario News Channel.
This is the scorecard where you score the latest news and in-depth views. I'm Anton Rojas, and this is tonight's roundup. On the scorecard tonight, feel like you're somebody who has that desire. Tell us about your experience. Get ready for a thrilling clash, thrilling hostilities, and keep your eyes on the prize. Sports is our business, and business is our sport. This has been the scorecard.
10 p.m. on BNC, the Billionario News Channel.
Welcome back to Basis Points. Trading at the Philippine Stock Exchange opened a few minutes ago. Let's take a look at the initial figures. Right now, almost everything is in the green except for the financial sector. The PSE index is extending its gains, albeit slightly, up by 0.1% to 74.40. Broader all shares index up as well, up by 0.2% to 39.71. Financial sub-index is the only one in the red on sharp selling, lower by 1.2% right now. Meanwhile, the foreign exchange market, the peso opened stronger from its previous close of 56.25, opening at 55.95 against the greenback. Now, to help us make sense of these numbers, we have with us the founder and chairman of Calum Trading Institute, Edmund Lee. Good morning, Edmund. Thank you for being with us.
Maiki, good morning.
Okay, Edmund, a lot of bullishness in the market as investors price in the recent rate cuts, the lower reserve requirement ratio, and easing inflation. Now, that said, how much of the bullishness we're seeing in the market right now is on account of institutional investors playing catch-up?
Well, I think that's the main reason why we see a huge run-up in the markets over the last 2 months, right? But how we look at markets, and especially the equity, is really from two fronts. First is liquidity, and second is growth, right? So if you look at the last 2 years, liquidity has been very poor, obviously, because inflation has been going up. Interest rates have also been going up. And striping most of the liquidity in global markets in general, right? And then the second part is growth. And if you look at the growth aspect, growth has been very poor this first half, excluding for some sectors, especially for the banks. But generally speaking, from a consumer end, even from the property sector end, earnings across the board have been relatively poor. 2023, including the first half of 2024, right? So given that both are negative, we've been fairly, neutral in the markets, but it does make sense because valuation was incredibly cheap heading into the year. I think I've never seen valuations this low, maybe close to pandemic lows in 2020.
Talk to us about valuations now at 74.40. What's a PE ratio on that?
Today, I think you're sitting at around 13 times PE. Yeah.
Okay, so what does that mean? At 13 times PE, how would you call us?
So that's the thing, right? How we're viewing it from this perspective is growth is still weak, right? It's also part of the reason why valuations are at this level. But the good part about what really changed in the last 2 months was finally the direction, which we've been making that call that we don't think inflation is going to come in as sticky as what the market is expecting. And finally, PMIs, CPI all started coming down. Growth started showing poor economic data, especially in the U.S. And finally, central bank in the U.S. Cut after 14 months of pausing. Now that liquidity end has now poured in, now we're seeing fund flows finally also come back to the Philippines.
And that's what we need. That's what we really need.
That's what you were talking about, catch up. But if you look at the fund flows today, $2.5 billion went into Indonesia. Philippines is just $200 million the last 8 weeks. So if you think at it from that perspective, it's actually still very, very small. But you've seen the impact, and that's the reason why markets, just on absence of selling, rallied.
What do we need to get the foreign investors to come in a big way as they did in Indonesia? I mean, the tides are shifting economically. The liquidity and the growth prospects are all on the up and up. Talk to us about what we need in order to get that kind of foreign volume.
The good part about that, people criticize us because we don't have that foreign inflows coming in. The good part is most of those shares have been bought back, obviously, by local. And the local have actually played a larger role with regards to trading participation and volume in the PSE, especially the last 10 years maybe. And I actually think that's a good thing, because now even just small amounts of liquidity coming outside can actually push the stock prices generally much higher than what we expected. So today, really, it's a local. What's really driving the PSEI today is just the locals sticking with all these good quality companies, paying great cash dividend, waiting this out, and it's the locals that are seeing that benefit today, which is not
supporting
before.
the market. Now, initially in the first half, your year-end target for the PSEI was at 7,100. Given that the tides are changing, how have you revised your target in light of the changes?
I think coming into the markets today, we were seeing around 625 interest rates. In fact, even for the 10-year Treasury on the Philippines, you're looking at 6.5. Now that has come down. We're sitting at less than 5.5, sitting right above 5.5 level. We're really hopeful that this comes down to 5% heading into next year. And so given that, just on risk-free rate and interest rates coming down, we're actually fairly positive for, and that's the reason why we also raised our targets for PSEI for year-end, close to 8,000.
Okay, close to 8,000. That said, you think this bullish uptrend in the market is here to stay over the next 6 to 12 months?
To be honest, we think yes. We're really hopeful that we can decouple from the U.S. Now, growth, again, like what we talked about, is still in question. Obviously, the reason why central banks globally are cutting interest rates because things are really slowing down, right? Now we're going to head into the hard landing. I don't think we're going to head into a level where we're going to see a systemic risk in global economy, notwithstanding any geopolitical or war crises that happens. Our narrative right now is just a soft landing. And the reason why is because if you look at corporates today, S&P 500 still grew, I think, 13-14%, driven by the Mag 7 or your NY FANG. And they've been cutting down workers and employees, right? So everybody, and I tell people, it's like the most anticipated slowdown, and the market knows that, right? We know business is going to be it's going to be tough in the next 6 months to 1 year. Most corporates know that. They've been cutting jobs, and it's the reason why unemployment has inched up a bit. But, you're still seeing profits across the board sit at record highs.
Yeah, which is why in come central banks to support these sluggish economies. Big supersized cut by the Federal Reserve just this month. Our own central bank jumped the gun. They cut rates last month. That said, how many additional cuts are you expecting from both the Fed and the BSP for the balance of the year?
Markets are expecting close to 150 basis points from the peak, 525. I think it was sitting at 375 as of last night. We're really hopeful that inflation comes down, both in the U.S. and in the Philippines. I think Secretary Recto also talked about 2.5%, right?
For September.
For September. We're looking close to 3.5% for a full year for next year, right? So give or take, we're looking at risk-free rates hopefully sitting right above 4.5% in the Philippines. And that's really what our target is for next year.
Specifically, before we go, just a couple more questions before we wrap up. What was your outlook for interest rates in the Philippines? How much do you think they're going to be coming down?
We're looking at 10-year Treasury close to 4.5% next year.
Okay. All right. Now, also, what are you advising investors to do right now? In the past 2 years, you told them to go long on Treasury, and that has paid off in the last 2 months. Right now, where should investors park their money?
Our investment philosophy has largely been getting paid to wait. which is buying good quality stocks with dividend, which is key. And the other part was long duration and long treasury. Again, both of those theses has paid off in the last 2 months. And we're hopeful that we might see rotation now happen into the next liners.
Yeah,
right? So,
interesting. Yeah, a lot of the buying action has been focused on the blue chip stocks. So you think that the market has the potential for the rotation into next liners?
That's what we're also hopeful for. We're fairly positive that the wind has shifted. And what do I mean is that the weakness in the dollar is just the start. One of the biggest concerns in the last 2 years was how high was the dollar going to rally. Again, our narrative today is that we think U.S. is at the start of that interest rate cut cycle, easing cycle, and we're hopeful that that shift is just the start, so that there's still more downtrend to happen on the dollar.
On the dollar. Yeah, that the rate cut, the easing cycle in the U.S. is going to be dollar negative. That said, how much upside potential are you expecting for the peso, given the rate cuts in by the Fed in the U.S.?
Unfortunately, we don't provide any targets with regards to peso. I think it's incredibly difficult. But in the short term, I think it's significantly oversold. We've come down a lot. I think we're sitting at 55.50 with the peso as of today. Can it come down some more? I think it can, but it's going to take a while, in our opinion.
Okay, all right. Now on to the next liners. Just really quickly before we go, what are your top 3 picks for next liners?
The banks have done extremely well, right? I think we're still seeing people play catch up in the banks. The ones with poor earnings so far in the first half, which we think might change, and we think that there is plenty of catalyst in the next 6 months to 1 year, are mostly your consumer stocks. So top of the line you'll see there is DNL. We really like DNL. I think DNL, coming from its peak 2 years ago when they hit 3.2, 3.3 billion in profits, was really the wrap up of their Batangas plant, which came on board last year, right? Last quarter was the first time they've hit positive income for their Batangas plant. They're still far away from their peak in 2022, but we think once they start heading back into that direction for next year, you're sitting close to maybe 14, 15 times PE in the stock. We think there's plenty of catalysts. Their capex cycle is done, meaning they already spent the 9 billion for the Batangas plant. They paid off more than 50 to 60% of their net income as cash dividend. So it's a great story, and you'll only be able to participate in those stocks because there's still growth questions in the short term.
Okay,
right?
And 2 more next liners you wanted to mention. I know they're Macro Asia and First Gen Corporation. Really quickly.
Yeah, I mean, we like Macro Asia. Macro Asia is going to hit 800 million profits this first half. Hopefully that goes north of 1.5, 1.6 billion for the full year, trading at maybe 7, 8 times PE. Huge cash flow, much better than its peak in 2016, 2017, and share prices are still down here. And last but not the least is First Gen. We like First Gen. Obviously, the biggest concern is its float, because it's not
11.7%.
traded, 11.7%, and most of the institutions and foreign won't touch it. But we think power is still a great industry and a great sector, and you're still buying at 4 times PE with 5% cash dividend.
All right. Thank you very much, Edmund.
All right. Okay. Thank you.
Okay, that was Edmund Lee, the founder and chairman of Calum Trading Institute. Now, before we go, some news for those who want to get their hands on the first samples from the moon's far side. The lunar material recently brought back by China's Tianghe 6 mission will soon be available for research applications. Details on how to apply for samples can be found on the website of China's Lunar Exploration and Deep Space Exploration. On June 2nd, the Tianghe 6 touched down on the far side of the moon, the side not facing Earth. 3 weeks later, the mission returned home with more than 1,900 grams of samples. This marks the first time humanity has collected material from this unexplored region, making it particularly valuable for advancing lunar studies. And that's it for Basis Points. I'm Maiki Oreta. We'll be back tomorrow for more news on the financial markets and more. Keep it here on BNC, the Billionario News Channel, always on top.
Welcome to Pathways to Success, a program that supports micro, small, and medium enterprises. I'm Mai Rodriguez.
We are giving spotlight with this innovative business enterprises that shares growth in our community. We support giving these entrepreneurs a chance to fuel their business and be known in the market. Take a look inside their stories, challenges, and success.
The more you learn, the more you earn. For more inspiring stories here on Pathways to Success, here on the Billionario News Channel.